and there's going to be other sources that you can most definitely see the recording if you're seeing the recording as well. And I just wanted to give a big thanks to Lisa and Mary for this opportunity to uh, to be able to share with you this topic today. So I know Lisa, would you like to say something a little bit about Kid County area development by any chance?
Sure, thank you, Leo. Well, as Leo said, I'm Lisa Kraus from Keith County Area Development, KCAD, here in Ogallala. And we are really grateful for our partnership with Nebraska Enterprise Fund, which has allowed us to have a series of webinars this fall. We started off with one on QuickBooks, and a few weeks ago we had another on record keeping, and now this is our third on financial management. And we're thrilled to have Leo Martinez here with us. Leo is a loan officer and business mentor with Nebraska Enterprise Fund. And so he's going to talk us through a lot of really great information, which is absolutely essential when you're starting a business or running a business. But before we launch into that, I wanted to give an opportunity for Mary Wilson, our executive director here at KCAD. She wanted to give an overview of one of our local programs that we offer here that offers some financing and
yeah.
Mary.
Yeah, wonderful. Welcome everybody. Thank you for joining us. KCAD has a unique development tool available, something we call the KCAD Revolving Loan Fund. It's similar to offerings that Nebraska Enterprise Fund has available as well. But we work in partnership with our local banks to help provide gap financing for our small businesses here, whether that's to assist with startup costs, business renovations, expansions, equipment purchases, things of that nature. So if you are starting conversations with a local bank about some business improvements or business startups, we encourage you to also reach out to us, and maybe there's some potential there for us to work together. And especially with Nebraska Enterprise Fund, we can also bring them on board and really leverage those funds that we have available to help our small businesses. If you have any questions, reach out to our office, myself or Lisa, and we'll share some of that information in the chat box at the end of this program.
That's awesome. Thank you so much.
And then I also wanted to take just a couple minutes, since we're a small group and we're doing this on Zoom instead of gathering around a table somewhere locally. But I wanted to have our participants, Vanessa and Stacy, take a moment to introduce yourselves. Let us know what type of business you work with, or that you're hoping to launch, if you might be an entrepreneur or a student or whatever your case may be. And then if you have a particular financial management challenge that you're hoping to learn about today, if there's a particular reason or question that you were hoping to answer. And I will just start off by saying that in my case, I do not have a business background. I have an international affairs background, and it doesn't always, the language of business doesn't always seem intuitive to me. So I'm hoping just to get a lot more familiarity with the basic financial terminology of balance sheets and profit and loss statements and all of those kind of things that are the basic working blocks, so that I can, understand conversations more fluently, I guess I would say. So Stacy, can I call on you next? I think you, oh, there you go.
There you go.
Okay, I work for ASAP Services. We do rental properties. I'm actually the rental agent. We have about 70 houses and different properties that we run, and we're also a construction business. So that's what I do.
And is there any reason in particular that you were hoping to, anything you were hoping to learn today?
I'm just getting into this. I just started this job, and sorry, it's a really busy office, so I have to keep moving away from noise. I'm just hoping to learn how to help my boss grow his business and help the other employees that are here to where they can make more as our business gets bigger. The employees, they gain also. So that's one of the biggest things, is making sure that people are, whether it's my boss or the employees, are taken care of.
Thank you so much. All right, Vanessa, can I turn to you?
Yes, ma'am. Hello, everybody. I'm Vanessa Brooks. I am in the Omaha area, Douglas County. My business, I want to start up a radio station, gospel radio station. Kind of what I'm, hoping to learn today is basically what steps to do next to start up and also financially, what I should do, what steps I need to take next, the right steps to take.
That's awesome. Definitely. Thank you so much, Vanessa. I think someone else joined, but I'm not sure. I don't think I see a name. We're doing some introductions, so I'm not sure if whoever just joined might be able to give us a little feedback on their business or what they're doing at all. You might still be on mute. Okay, we can most definitely scroll back and see and get more information about the business and the background. So yeah, definitely. Thank you so very much for everybody to join today. Today we're going to be talking about financial management and what it entails into the business. On the registration invite, there is a file for you to download and keep. That's for you to get more information, and it also has some diagrams of a profit and loss statement and financial statements that you should be able to follow through with. If you have not had a chance to download them, that's perfectly fine. You can either do so once we're either done or while we're having this conversation. Obviously, we're not in person, so I usually like to have this more dynamic where I call on you on your business and experience that you currently have. So we're going to have to do that via chat. So if you have questions, please feel free to leave your questions in the chat. If you have comments, please do so as well. I'll do my best to take a pause and answer your questions as we go through. There's gonna be a lot of information thrown at you, but just understand that this is just basic information and that if you don't know or not doing any of this yet, it's perfectly time for you to get started. If you, as Stacy's currently helping the owner of this business, and Vanessa's actually starting the new business, it's a perfectly time for you to learn these and actually start developing skills on it. So let me share my screen real quick with you, and we should get started. All right, can you please let me know if everybody sees this screen? Maybe a thumbs up, a shake hand. Are we good? Think so? Can someone say something, please? All right, I see Lisa saying yes. All right, great. So this is financial management. You got it? Okay, great.
Yes, sir.
Awesome, good deal. So we're gonna be talking about the benefits of financial management. We'll touch a little bit about budgeting. We'll touch a little bit about bookkeeping, financial statements, business financing, and some things to remember as we summarize the whole talk. Again, feel free to leave your comments, questions in the chat. Lisa, I'm not sure if you will be or maybe be able to see the chat while I'm on the presentation. Maybe you can help me monitor that at all. If you can.
Yes, I can see it, and I'll try to keep an eye on it. We saw that our iPhone users, they can't talk right now because they're at work. So
that's wonderful.
We'll
No worries, not a problem. Sounds like a plan. All right. So basically explaining the financial basics of a small business, it does include the start of financing when you start borrowing money from either financial institutions or nonprofits as we do, you're growing your business, financing working capital, and financing fixing access. We'll be talking about that a little bit more in depth. But one of the questions that I actually want to ask all of you that are in the meeting is actually, what do you know or what do you want to learn about financial management? I know Stacy said something a little bit about possibly helping her boss with it. And Vanessa said something about starting the business. But what do you currently know about financial management in a nutshell, by any chance, Stacy or Vanessa? Any of you? What will be the first thing that comes to mind when you say financial management?
I guess for me, it would be like, just making sure you keep good books and stay ahead on everything is kind of what my first mind kind of goes with.
Yeah. Well, you're not wrong. That's pretty accurate. Anything to add, Stacy, at all?
For me, because with doing the rentals and everything else, of course, we have to go in and we have to do maintenance and fixing things and stuff like that. We do attempt to stay within a budget, and I mean that's all part of the financial thing. Is you don't want to overextend your business with more than what it can actually what your bank account can actually handle. So I actually take part. A big part of that is making sure that everything's paid, whether it's from the renters or it's from us putting money out. So
definitely, yeah, definitely, and yeah, I mean, you're absolutely right. I mean, we want to know if you're profitable. We want to know how much are we going to grow, and if we're going to grow. We also want to know what is working and what's not, so we can create new products and reach out new markets. And really, all that entails, you're not going to be able to find out if you don't keep some sort of records of your finances and how your business is growing. A lot of the times, I tend to compare this with your personal finances. If you don't do a budget and you spend more than you earn, you end up being in debt. And so it's basically the same concept when you're talking about business. You have to start budgeting, and you need to do that in a realistic way in order for you to be able to grow. And we'll show you some tools but in reality, there are several financial management practices and tools that are commonly used for small businesses, and one of those is budgeting. And in reviewing the budget, we first have to be as realistic as we possibly can. You have to choose every single category that your business has expenses on, and what categories you're currently not adding to your budget that actually should be on your budget. You need to do this monthly, and if not twice a month, depending on your industry. I'm sure that with the rental properties, if you're buying material every week, you need to make sure that you have that recorded. You don't just want to wait at the end of the month and do that all at once. And that is going to help you for a lot of decisions that you're going to take on your business, such as whether you hired additional help or whether you actually have to lay off a few people because your business is not doing that well. So one of the other tools and one of the things that I always stress to my new clients is about bookkeeping. They're both totally different, and a lot of the times when you're a small business owner, you tend to wear so many different hats. I mean, you're the marketing manager, you're the supervisor, you're the manager, you're the employee. You do so many things as a small business owner. And then a lot of times you are also your own bookkeeper. The good thing with that is that you know what's being spent and where's it going. The bad thing of that is that you don't always record that as you should. And so what that tends to happen is that you tend to overlook different things that you have already spent, and they don't always make it to your books. So one of the first things that I always advise my clients is that if you are planning to run a business, try to start from the beginning with either a software or someone who's going to handle your books. The critical components is just financial management on this. You need to keep your finances organized and be able to track your income and your expenses. I mean, there's just so many different benefits that you will get by starting this early rather than just waiting for it at the end of the day, especially when it comes to financing and presenting your books to your banker when you need to do your taxes, or even when you have to pay yourself is critical when it comes to this. So I'm curious to see if any of you are currently using any type of bookkeeping software at all, or what's your bookkeeping method at the moment? Anybody that would like to share or feel comfortable sharing, or maybe are thinking on getting one at one point?
Here at KCAD, we use QuickBooks to manage our accounting.
Awesome.
And then we work with a local accountant for additional support. And then I also wanted to note that our iPhone user had mentioned that budgets and managing funds are the things that come to mind when they think of financial management.
Oh, awesome. Yeah, definitely, absolutely, yes. QuickBooks is a great software. It's often utilized the most. There's always the good old pen and paper, but obviously you have to keep every single thing on it and be able to consolidate at the end of the day. All right, so what is really 10 basic steps that you can do when it comes to bookkeeping, and we already talked about the software. Another thing that you could do is make sure you have a checking account, a separate checking account for when it comes to your business. I mean, and you can even have two different checking accounts when it comes to your business to keep everything separated and know what's going where. Also, every time that I see, or when someone comes to the office and start talking, a lot of the times they don't have physical copies of the statements to reconcile their account. Always try to keep a paper copy of it, even if you have access to the online banking, just because it's a lot easier for you to be able to check what is going out and what's coming in on your checking account. So always when you start balancing your checkbooks and your checking account, that's always a great tool. Tracking and deposits. Those are two things that a lot of us don't always do, especially if we send someone else to deposit or checks every day that we start a new day, and we don't always track what was sold the day before. This is crucial because you tend to realize what you actually are selling or not. I had a restaurant business who was trying to create a new item for their business, and they just did not know what was selling and was not until we sat down and we actually were comparing what everything was selling day by day. So tracking is very, very important for your business. And season changes, and you might be selling something different or building something different at different seasons of the year. You also have to make sure that you write business checks for your business expenses. That helps you track. That also gives you a great way to protect your business from fraud. So always make sure to keep them safe. But write business checks. Also, this is a common. If I say mistake, don't take it too hard. A lot of times we don't always, as business owners, take out a business card. We tend to utilize our personal business card. That needs to change because that is actually a business expense. And when you tend to reconciliate or refinance debt, it's very hard for us to be able to argue that was business expenses and not personal expense. So always try to get a business card right from the get-go from your bank. And the other thing that is really important when you're doing the bookkeeping is make sure that you pay your business expenses first, not all the end. Make sure that that goes all on together, and that goes tied hand in hand with your profit and loss statement. And we'll talk a little bit more about the profit and loss statement here in a little bit, but here's really where you realize whether your business is making money or not. It doesn't necessarily mean because you're selling more that you're making more. In reality, if you're selling more but you in reality are losing money, the profit and loss statement is the one who's going to actually tell you that. And we are all in business because we want to make money. So you got to make sure you pay yourself on our salary. It might not be a lot at the first year or the second year, but you need to start making payments to yourself. Otherwise, if it's not a business, it's not making money, it's not a business. That's just plain and simple. We're in business to obviously help our families, but also to make money. So just keep that in mind. Any questions about these 10 things about bookkeeping at all? And I'll pause a little bit. Anything that you're currently doing that kind of resonate to what I said? No? I see some heads shaking. That's awesome. All right. So software, we talked about QuickBooks, and we talked about pen and paper. Here's one thing that I always stress to my clients. The more you are able to delegate to someone else or something else, the more time you have to spend with your real business. When you delegate the financial aspect to a software or to your bookkeeper, then you have more time to spend on strategize what really is best for your business. So when we're talking about software, it is easy to organize and complete your daily accounting task. I mean, I know Lisa mentioned QuickBooks, and that's a very easy way for you to enter your sales and be able to pull out your report in really less than 5 minutes. He also creates an accounting report, which is going to be great for your banker or your financial institution when you're coming to us for a financing, because you're able to actually show that your business is able to cash flow. He also helps you to track the financial health of your business. If you wait at the end of the year, I know I had a business that it was a husband and a wife that always kept the receipts when they go to the grocery store and buy stuff, but those fade out. So when it's the end of the month and you're trying to reconcile all of that, and then you cannot be able to read the receipt, you're trying to make up numbers. And that's just for you to be able to have an accurate statement for your banker. You're not going to come with a shoebox full of receipts. So just starting from the very, very early, trying to get a software or a bookkeeper is great. It's a great benefit for you. And also, you don't run out of paper when you use software. Besides, QuickBooks has 2 different platforms that you can utilize, the cloud, or you can actually buy the physical copy on your computer and upgrade it every so often. But we'll be talking about 3 different statements or 3 different sheets that you should be familiar with when it comes to owning your business and dealing with your finances. And us as lending officers are the first thing that we ask you for, because this is in reality what it tells us that how your business is doing. Your balance sheet, your cash flow projections, and your profit and loss statement. These are the 3 things that if you don't know how to create, it's a perfect time for you to start learning how to do so. We'll go over a few things on what each statement includes. But the most important, at least for me, is the profit and loss statement. The cash flow is absolutely crucial as well in the balance sheet. But really, the profit and loss statement is the one that you should be able to take a closer look. Even if your bookkeeper is doing your books, you should be able to know how to read it at least, and know what's on it. So your balance sheet includes a snapshot of a business with your assets and your liabilities. Now, your assets is on your left-hand side, your liabilities on your right-hand side. Your asset is everything that you own and could potentially be liquidated. The way that I look at it is if you look at your house, if you look around your house and any kind of furniture that you currently are owing or paying to the credit card or to the furniture store, that is technically not yours, so you could not sell it. So that technically would be end up on your liabilities. But anything else that is already yours, you already pay for it, that is going to be an asset for you. So you should be able to know in your business, if you're talking about your business, what kind of equipment that you currently own, that will be on your asset list, and what thing are you currently in debt, either with a loan or anything that you're paying on, that will be part of your liability as well. This tends to be a little confusing, so I'll open it up for any questions at all. I'll give a few seconds. Any comments, questions? No, all right, well, you stop me if we need to go back, okay? Great. So part of the balance sheet, and this is on the files that were attached on your invitation. So feel free to either follow along or go in. So this is just an example of what a balance sheet should look like, and we're talking the first part and the first portion of it is anything that has to do with your assets. As we mentioned, everything that is yours or you currently own, such as cash or anything that is already coming. You also have anything that is already purchased or yours, and then you have your liabilities that tend to be, it looks like this one is a long-term debt, could possibly be a loan. And then that's really how you determine how much equity you might end up have on your business as well. The QuickBooks tends to do this report fairly easy. It will be very hard for you to do that all at once the night before you have to present it to your tax to submit. So always start early, and this will also determine the amount of time that you're going to spend on your books as well. So, all right. Does anybody, give me 1 second. Has anybody done any cash flow statements at all at any point? Or does anybody know what a cash flow is, cash flow statement? And I mean, it's perfectly fine if you know or just want to throw up an answer. It's right there. All right, well, the two primary definitions of the cash flow statement. It balances the cash received less the amount of cash paid over a period of time. So basically, it tells us how much money do we spend minus the amount of cash that we earn, basically, and how the cash has been moved in the business. This is really good because as a banker or as a financial institution, we need to know whether your business is moving cash or not. And that's where I was talking to you before. Not because you're selling a lot, it means you're making a lot. If you in reality didn't price your product right, and you're selling something where you're losing money, in reality, you would not know until you actually have a statement like this. And that tends to happen a lot on the service industries. It tends to happen a lot on construction as well, especially because we tend to underbid our materials and stuff like that. So the financial statement uses the assumptions of the forecast. The company can cash flow in and out. Also, what I like to stress out about these a lot is the third point, because it projects whether the cash is received will be sufficient to cover project cash and disbursement. Meaning that if you don't know, for example, and not to put Stacy on the spotting here or not, but if you are going to make a project and you are forecasting that you're going to spend X amount of money, but in reality, you actually are going to spend more and you did not do the projections right, then you end up hurting the company more than you're benefiting the company. And that's why it's so important to do these projections because otherwise you don't know if you're going to be making money or not. And so how can a cash flow projection help, and when do I need one? Well, you need to set the sales and expenses goals, and that can be per quarter, depending on your business. I think I believe Vanessa mentioned something about a radio station, so you definitely have to set some goals and what expenses you're going to be having for that. It also determines a break-even point. I mean, this is crucial.
Okay.
Yeah, go ahead.
No, I said okay. I was listening to you.
All right, no worries. Break-even is super important. What the break-even means is how much of whatever you're selling or you're making you need to have in order for you to be able to actually make money. So as soon as you hit that sweet point, anything above that is profit. Anything below that, it tends to be loss. So you need to find out how much do you have to make per month or per quarter to be able to break even on your business. Not a lot of business owners tend to do this. It is very crucial for you to do it. So that's why the cash flow projection helps you to find out your break-even point. It also plans whether you need to buy or replace any existing equipment. I mean, you don't know how much money you're gonna have until you actually do a projection. And in this case, I believe a lot of the construction companies tends to either buy bobcats or any other bigger machinery for upcoming projects. And if you don't know how much do you have on books coming up, it's going to be very hard to determine whether you can afford to buy that, or you should actually or you should not buy it at all. And also it determines the cash whether you need to purchase inventory, either for seasonal cycles or for your regular day-to-day sales.
Okay.
Also, it tries the liquidity when you actually have some cash realities or not. And that's very important though, especially when it helps in determine whether you need to do financing or not. It's always easier and cheaper to borrow from yourself the first time. I mean, you always have to have a good relationship with a bank or financial institution to be able to grow your business. If your business is healthy, even when there's loans against the business, there just have to be smart loans when you're financing. But always remember that it's always cheaper to borrow from yourself, and that helps you when you start putting projections in place to know what where your cash flows actually is. It also shows us as a lenders the ability that you have a plan for financing. I mean, I couldn't tell you how many times I had to sit down with some clients and actually go step by step on the projections for the business. And when the first question that I ask someone is how much money do you need to borrow, and they say, well, I don't know, it right away tells me that they need help with their books. And so that's one thing that you always should be cautioned about is before going to a financial institution to ask for financing, you should know where your business stands to be able to know how much your business can afford or what your business needs in financing needs. So this is an example of a cash flow statement. Oopsie. The first part, I don't know if you can see, I think it should be quite big on your screen. You have your sources of cash, anything that happens to be on your end. You got your operating expenses and your non-operating expenses. Again, depending on what software you use, it is going to look very similar to it. There's some free tools online that you can utilize to start doing this. I know Score has some of them, and there's some organizations like ours that helps you with this. But by all means, it's just, I guess what I'm trying to say is, if you do not discipline yourself as a business owner, especially now that you're starting, in doing these things or these projections when you first start, when you start growing, it's going to be hard for you to manage it. And so even though it's an expense to either get a software or a bookkeeper, by all means, think about it before or right now when you're doing it. Any questions so far? We're going to go to the last point of the cash flow statement right now. Any questions at all? No? All right. All right. So how to increase the cash flow? What could an owner do to increase cash flow in the business? A lot of the times, the first thing that I hear is number 3, which is reduce expenses. Yeah, but you can only turn off so many lights before the company start looking dark. So reducing expenses is just a part of it. The other thing that you could do is increase prices. I mean, you don't have to increase prices tremendously. You can increase prices gradually, but you also are able to do that as well. You also are able to increase the number of items that you sell. Again, we go back to the financial statement. If we don't know how much we're selling, we don't know how much we should sell more of, or what of we shouldn't be selling more. We also change the time of expenses. It does tells us that maybe in summer we're making more money, so we should make either wait and not spend a lot of money on the winter, but actually wait it out for spring or summer, so we know that we have more cash flow. And then it also helps you save the money for any openings or any startup period. So if you start putting money aside, you start able to borrow money from yourself as well. You're able to obtain cash and other than sales or lines of credit that can help you, especially if you're a seasonal job or a seasonal business. It also reduces or changes the timing of the owner draw. So as I mentioned before, we're in business to make money. So if you're not paying yourself, maybe this quarter or the next quarter, you should be paying yourself along the line to be able to get money out of the business as well. It also helps you to buy inventory at a lower price. If you have more money and you can buy bulk, you can definitely save some money when you're buying bulk, especially in the construction side. Restaurant side, not as much, but construction side definitely yes. You can obviously obtain credit from vendors, either do a 30 or 60-day note, or establish any policies to get paid sooner by customers. I know I had a client who was doing landscape, and they require their customers to pay them once they were done. If they pay them right away, then they get a little credit. So that's another way for you to get your money right away. So how easy is to get a profit and loss statement? It's relatively easy, but if you have a software that does it for you, it definitely is very hard when you do it by hand. When you're entering all your sales or your expenses, everything in it on the software, all you gotta do is click a button that says report, and there you go. You have a report. And you can measure revenues, expenses over a period of time. You can track your profitability and whether your business is making money or not. Again, I don't know if I have said it before, but you should think about getting a software before starting your business or doing your business. So I don't know if I have said it or not, but here's me again saying it again. Please think about it before you start using pen and paper. It's gonna definitely help you a lot. Nebraska Enterprise Fund is currently offering some QuickBooks trainings as well. So, and I'm sure there's other organizations there who has them. Just feel free to reach out, because it's very important for you as a business to have it. So what's a P&L, or a profit and loss? And I think I mentioned this before to you. To me, at least personally, I think it's one of the most important statements that I see when I'm trying to lend money to a business or an individual, because it just shows me how successful the business is, whether they're selling or not. It measures the ability for the business to grow and to repay debt. It tells me as a lender officer whether your business can repay a $5,000 debt, $10,000 debt, depending on what you're asking for your business. And it's very hard for me to argue that your business is going to be able to repay a debt of $10,000 when your business reported a loss last year. So just kind of be cautious when you're doing your statement, because at the end of the day, it reflects on your business as well. So what is the basic formula for your profit and loss statement? All right, well, it's your sales, total sales, minus the cost of goods sold, meaning anything that you buy to produce your product, that equals your profit, minus your overhead, which is anything else that is not included on your cost of goods sold, that equals your profit. And that really is what your profit and loss statement entitles to, is a reflection of your sales and what everything is left over. I had a client that I was talking to a while back, and he was struggling trying to make ends meet, and we looked at the books, and it happened to be that he was spending more money than what he was generating, and that's very common on the small businesses. So what is a basic formula again, or what should be included on the net profit? Your owner's draw, I mean your own payment, your future expansions, your principal, loans, repayment, and your income tax. There's two things that you can run that you cannot run away, and those are your taxes and your loans. Somewhere, somehow, somewhat, the IRS is going to come back and hunt you and make you pay. So by all means, make sure that you get the payment that you need to do for your income tax, and make sure that you pay your lenders or your suppliers or your employees. Otherwise, definitely your business is not going in the right direction. Any questions so far? Any questions between the profit and loss statement and the cash flow statement at all? We'll be entering into lending here shortly.
That's so girl.
Are we good? All right. All right. So let's jump into do's and don'ts of financing. Invest your own money. Why is it good to invest your own money? Well, we mentioned before, it's the cheapest way for you to borrow money. Earn the right to borrow, and that has to do with a few years before you start borrowing money. You need to make sure that you take a look at your personal finances, that you're making your payments to your debtors, that you are doing the right things to earn the right to borrow money from someone. You also have to make sure that you show profitability. I'm sorry. When you're filing your taxes, a lot of times the small business owners tend to not show profits for fear that they're going to pay more taxes. Well, yeah, that's true. But also, if you're showing losses and not profit in the last few years, then it's very hard to argue that your business is going to be able to sustain a loan to expand when you're not reporting any profits. Also understand and keep working capital. That's huge because we are able to finance so much percentage of your working capital, but in reality, your business should have some money saved aside for working capital, at least 30 days. At least 30 days, minimum 30 days of working capital for your business. Make sure that you match sources and funds, that you're able to know who are you going to ask for money or not. Also, understand, see, there it is. There it is. Understand your financial statements, your collateral options, and we'll talk a little bit about collateral here in a second. Your risk and your cost for loan types. versus your line of credit to your term loan to your short-term loan, or maybe grants. Uh, just like we go shop around for best sales on groceries or clothing or whatnot, you should also go shop around for loans, for interest rates, especially for banks. Make sure that the bank or the financial institution you're working with aligns to the values and has the products that your business needs. Then it's able to help you to grow as well. Because at the end of the day, those are going to be your best partners. Your bankers and your financial institutions are your best partners for your business as well. And then, just like we're doing, get expert advice. I mean, I'm sure Lisa and Maria will be happy to talk to you in case that you need anything. I mean, that's what they're there for, to help you understand what products they have and how they're able to help you with your business. This is just a phone call away, and it's better to ask before you start doing than actually doing and then asking before, after that.
Absolutely. I'm going to put our contact information into the chat box so you can all see it.
Yeah, awesome. Absolutely. Great. So we're diving into loans. We got just a little bit before we end the webinar. So I wanted to make sure that if you have any questions, feel free to drop them on the chat, or feel free to unmute yourself and ask questions. We'll be just getting into steps of getting a loan, ready for a loan, and how do we get your business ready for a loan. One of the most important parts that you need is to have a business plan. A lot of the times you already know what your business does. You just have to put it in words. And the reason why is not other than we don't know what your business does or how your business operates. And that's what the business plan does. It gives us an overview of what you know about your business. And it doesn't have to be an encyclopedia. I mean, 10 pages, I'm sure that will do it, as long as you have everything in there that your business currently does. Also, you gotta know what can you afford. If you're asking for a $30,000 loan, but your business can really only support a $10,000 or $5,000 loan, not because you need $30,000, it means that your business can afford $30,000. Make sure that you study your financial statements before coming to a bank or talking to a financial advisor about that. Just because you want to understand what's on your numbers and you want to be able to explain to us why did your business experience a loss last year, if that would be the case. Also, make sure you check your credit report. Now, understand what I said. Check your credit report, not your credit score. That's two different things. Make sure that you check your credit report to make sure that everything that is on your report is accurate. You're entitled to 2 credit reports a year for any of the institutions, or I believe it's 3. For any of the one for every of the institutions that are out there that have a credit reporting. So you can theoretically get 3 credit reports, 1 from each. So just make sure that you check with that. Also, make sure that you have collateral. And collateral can be anything from equipment to personal property to real estate. But make sure that you have something to collateralize the loan for, especially if it's a bigger amount. And that just kind of shows commitment on your part that you're actually have some skin in the game as well. And then show some equity contribution as well. So save some money. If you're planning to expand your business and you're putting money aside, that speaks huge about you character in the business as well. When you're trying to borrow money from a bank and you're trying the bank to finance 100% of your project, and you are not putting anything on yourself, then really we're financing your dreams more than anything. But there's also have to be some sort of money coming from you as well, either 10%, 15%, 20%. It depends what the bank might look for. And research your financial options. We talked about lines of credit. We talked about term loans, grants. I know I had a client who was looking for a $20,000 loan, but he was into tech, and there was actually a tech grant that he was able to apply. He actually got $50,000 on a grant. So make sure that you use the product that you need. If your business is construction and a line of credit is better for you, well, definitely rather than if you're looking for a loan to expand your business. It's definitely something that you, again, visit with Lisa. Their phone number is right there. Their email is right there. Visit with Mary. I'm sure they're going to be able to help you find the right product for your business. Loan package. Again, what should you give a banker or a financial institution, and what should you include in your loan package? Well, we talk about your business plan, your financial statements, which was your cash flow, your profit and loss, and your financial and your balance sheet. We talk about financial statements and your business taxes. Make sure that your business taxes and the bookkeeper and whoever is being your tax preparer is filing your taxes the right way. Not just giving it to someone else to do it. It means that you're done with it. At the end of the day, it's your business, and you should know what you're claiming and what you are giving your tax preparer. What other things should be in there? Well, the amount of equity that you have, your credit report, any collateral that you have and you're able to put on your deal, your purchase agreement if you're buying anything, your appraisals or contracts if you're expanding, any estimates of your contractors, and how would you qualify for a loan? Now, good credit is based on the FDIC. I'm sorry, not the FDIC, the FICO score. So you go anywhere from 330 to 850, if I'm not mistaken. Anything over 650 is considered okay, but anything over 700 is considered good. So just know where your credit score is. If you're planning to apply for a loan, be prepared before just showing up and not expect what you have. It's a lot better when you say, okay, my credit score is 650 and this is why. Obviously understand that there's some regulations that the banks need to have. So there's certain credit score that they should have, that you should have before you apply for a loan. You actually make sure you have some equity contribution and that you are able to repay the debt. Because you'd be amazed of how many people want to get the money from an institution and actually not have the ability to repay it back. So make sure that you do the due diligence before coming to apply for a loan or whatnot, as well as the loan value ratio that you're actually going to prevent. Now, there's a few things that you can do, or a few institutions that you can come to, and that's banks or regional lending organizations. I know Nebraska Enterprise Fund, we do small lending, gap financing, and we do term loans as well. Banks have different products. Again, you should go and do what your business is able to do. But also there's so much that you can do in a financial institution that is able to help you with. So always ask. It's better to ask than assume. I know my wife has told me that before sometimes. So I tell you that as a business owner, make sure that you ask before you venture on your own. You're not alone, a business owner. Before we go into the key points to remember, as anybody has any questions that we can address before this? Anybody? No, I mean, it's fun if we don't. What's funny though is when I have this webinar or these classes in person, there's always that one person that before I leave the door is like, I have a question. So I can actually have that right now because we're virtually. So I want to make sure that I answer the questions great. But all right, so the key points to remember. Financing is getting the money you need to get started, to operate and to grow your business. You always have to start with a budget. Remember, budget, budget, budget. Did I talk about bookkeeping? I think I did. And to make sure that you have a software, I think I mentioned a few times to get a software before you do anything else. The three statements that you need to remember are your balance sheet, your cash flow statement, and your profit and loss statement. You should be able to know how to read them. You should be able to know what it is when your accountant gives it to you. or when you start preparing for yourself. Make sure that you keep separate personal and business. That's healthy in life. Keep your personal life separate from your business life, as well as your money. Make sure that you keep your personal account separate, your business account separate. Make sure that you know the factors that affect your ability to get a loan, and that is your credit score, your equity contribution, your repayment, your ability to repay the debt, your debt ratio. And as in conclusion, we have learned so much right now, and there's a lot that you probably have questions on. You just are not going to tell me right now. But Lisa has dropped some links and some contacts for Mary and her. So make sure to reach out to them as well. Feel free to reach out to us as well. I know there's a few more classes that we're going to be providing. But what really I want you to get out of it is that as a business owner, there's a lot of stuff that you need to do. There's a lot. The good thing though is that you don't have to do those things alone. There's definitely something that you can do as well, and you can always have people to help you with. I think someone wrote, "Is it bad if you transfer money between personal and business account?" It kind of is. If you're gonna transfer money from business to your personal as a source of payment, I would definitely, rather than transfer it, actually withdraw it. So there's some paper trail, and actually, or either write a check. So you just have, so you are able to actually give some sort of explanation why that was transferred. So yeah, I hope that answered your question. It really depends on what happens. I know one time my debit card from business was expired. I didn't get my new one, and I had to transfer money because I was gonna pay. So I did that. But if I'm not mistaken, I don't think there's a possibility for you to transfer money between accounts electronically. I could be wrong though. I know it wasn't before at one time. But all right. So that is it. We got a few minutes. I open it up again for questions. Anybody has a question, comment?
Leo, this is Lisa.
Hi,
Would
Lisa.
you mind just letting us know, I know Nebraska Enterprise Fund has a ton of classes and a ton of resources. Could you let us know where to look for those or how to find them?
Yeah, absolutely. Thank you so much for that. So I'm actually plugging in, oopsie, it didn't turn in as a link. But our website is netbiz.org. You can most definitely find all the event, classes under the events page. You can also find us on Facebook on the Nebraska Enterprise Fund. If you click on events, you'll see all the classes that we have. We also have, because we do partner with our collaborators, when we have QuickBooks classes, there's some sort of fee, not a lot, but there's a discount code for you guys. So if you happen to need QuickBooks training, we have those throughout the year. Just keep us posted on it, on the event page, and then we'll be able to help you with that as well. Yeah, absolutely. Thank you so much for that. I appreciate it.
I had a question. This is Vanessa.
Hi, Vanessa.
Hi. I wanted to know when the next time would be that you have a class on the business plan writing.
Oh, that's a great question.
I know, I'm gonna be honest with you, I know I need help with getting mine written up, and I don't know, I just kind of get a little overwhelmingly anxious and kind of worried about the things I need to know about getting it done right.
That is a great question. I am not 100% sure of that on the top of my head. However, if you could drop your email maybe, or send me a message with your email,
Okay.
we can most definitely get you some information. I'm not sure, Lisa, do we have a schedule of a business plan for this series at all? I cannot hear you.
Okay.
Sorry, not here for KCAD. I think the next class that we're thinking of offering would be on business transition planning. So
Okay.
at the end of the road, what to do with your business and how to transition it to someone new, the succession plan. But I was going to see if I could find something on your site, so hang on.
Yeah, absolutely. I know BC Clark is the one who offers those, but I am not 100% sure when the next one is. So I apologize about that. But I can get that information to you if you either want to either send me your contact information or maybe reach out to Lisa and I can forward that information to her or Mary.
Forwarded to who? I'm sorry.
To the Lisa or Mary, I'm sure. The information is in the chat.
Okay. Okay.
Vanessa, I do see that there's one coming up on the 28th of September.
28th of September?
Yeah, business plan seminar. I'll put the link here.
Thank you so much. I appreciate it.
Yeah.
Yeah, for sure.
Okay.
Yeah, well, thank you so very much for everything. I mean, I really appreciated having you all and for your feedback and your questions. Yeah. Is there any other questions that we might have at all? I don't see any other in the chat.
I enjoyed the class. It was very good, very good.
Thank you so much. I appreciate it. I appreciate it.
Thank you so much, Leo.
It's my pleasure. It's totally different when it's in person for sure. But this has been amazing. Thank you so much for your time. I greatly appreciate it. Again, I put my contact information on the chat with my extension in case that anybody needs to reach out to us. Yeah, other than that, thank you so much for your time. Lisa, Mary, you got anything else to say before we close up?
The only thing I would mention is that I will be sending a link to everyone who registered for this through the calendar invite that BC had shared. So if you don't mind spending 30 seconds to fill out a quick survey on what you thought of the presentation.
Awesome.
Okay.
Yeah, sounds good. Well, thank you, everybody. I hope you have a great rest of your day. Always reach out if you need help. Have a great day.
All right. Thank you.
Thank you.
Bye-bye.